But for now, we're joined by Seth Freeman, who's the Senior Managing Director of Glass Ranta Advisory and Capital Group LLC, who's joining us now. Hi, Mr. Freeman. Good morning to you, and thank you so much for taking the time out and joining us today. Mr. Freeman, globally, the way, things are shaping up, especially on as far as the U.S. is concerned, we are hoping for a September rate cut, from the Federal Reserve. But if you look at the way the markets are moving, the markets are sitting at record level highs. But the inflation data that came out some time back, that showed a bit of an uptick coming in because, sooner or later, the tariffs will begin to show on the price hikes or the price increases of the inflation coming in the U.S. What will be a Fed stance in that case?
Well, the Fed looks at the totality of data, of course, but we're also seeing employment rates starting to decline, and possibly that's sort of balancing the view in terms of this small increase in inflation that was just reported. It's very amazing that in a matter of probably about 2 weeks, we've gone from a 65% chance of a rate decrease to a 45% chance, and now with the Jackson Hole Assembly, an 85% chance of a decrease. So it's very volatile, and I'm sure the Fed is looking at all the data.
All right. Hi, Mr. Freeman. This is Kanishka also joining in. Like you said, it is very volatile. I wanted to understand, what do you think the impact on markets is going to be? How do you expect the U.S. markets to start this Monday morning? We have had 2 weeks of winning, even though Friday wasn't all that positive for S&P 500 and NASDAQ. But for the rest of the week, what is your expectations with the Jackson Hole Symposium due this week? How do you expect the markets to perform this week?
I think they're going to be just looking for any kind of signals from Jackson Hole and looking and seeing what happens Monday with the meetings with President Zelensky and the European leaders. Coupled with that, of course, is the pending tariffs on India, among other countries, and how that plays into oil prices.
Now, one final quick question, taking a cue from what you just mentioned about the tariffs, the secondary tariffs on India. We already have a 50% tariff imposed in India. But we have a meeting that's coming up on the 25th of August where the U.S. delegate is traveling to India. What can we expect to come out of it?
I have to imagine there's going to be a conciliatory tone. It's been very rough, especially over the last 10 days. The reality presently, though, is that a major aspect of India's exports to the United States, electronics and also pharmaceuticals, are presently exempt. So let's assume that doesn't change. We're looking at higher diamond prices, and that's kind of at a time where, frankly, demand for natural diamonds is at a decline.
All right. Thank you, Mr. Freeman, for that and taking us through all the macro cues that we need to watch out for as far as global markets are concerned. Thank you so much for joining us this morning. On that note, we'll let you go. All right, then. Now